You made a call on my show a couple months ago that Bitcoin is heading to $200,000, I think, by the end of the year. I think you said. Are you still stick to that timeline? Bitcoin's down to
I do.
92,000 now.
By the end of 2025. I mean, I also made calls that Bitcoin would hit 100 by the end of 2024. Unfortunately, I was right about that, although it's bounced around at that level. But yeah, I do kind of think we'll see 200 on this particular cycle.
Lawrence Lepard joins us once more. He's the managing partner of the Equity Management Associates and partner of the Bitcoin Opportunity Fund. We'll be talking about his views on sound money in 2025 and his new book, The Big Print. Very interesting book. Welcome back to the show. Happy New Year, Lawrence. Good to see you.
Yeah, Happy New Year. Nice to see you, David. Thank you for having me on your show. I always enjoy talking to you.
Give us a 60-second elevator pitch for your book.
Yeah, so the pitch is I want an average American or Canadian or really citizen of the world, but obviously I live in America, to be able to pick up my book and read it and say to themselves, oh, I now understand why, this economy is damaging me and what I need to do to protect myself. The inflation is really the problem of our age, and I think it will continue to be the problem of this decade. And it's gotten worse. And although it's abated a little bit right now, I think it's going to continue to get worse. And so, and I think a lot of people don't really fully understand it. People in the financial markets might understand it, but the average citizen doesn't understand it. And so I wrote the book to try to educate the average citizen as to why it's the government and the government policies and the Federal Reserve that are creating inflation, and then to lay out a way that they can protect themselves and how we can fix this broken system. Because I think you would agree, and probably many of your listeners would agree, that the system is broken. It's really not working very well for a lot of people.
I want to get into those details and talk
Sure.
more about the book in just a minute. This leads to recent news. Actually, you're spot on about inflation. You're not the only person concerned about inflation. The Fed is. The Federal Reserve is concerned themselves. Fed Governor Michelle Bowman said today on Thursday that she supported the recent interest rate cut in December, but she said that should be the last one. Do you agree?
Well, yes and no. I mean, I don't really comment much on Fed policy because I think almost by definition what they do is going to be wrong. But I can see why they have to say that, because some of the PPI numbers have been coming in hot. And so the Fed is really very much trapped, as I'm sure we'll discuss. And that is to say they would like to continue to cut rates because the federal government interest expense is out of control and creating larger and larger deficits. But in turn, the economy is doing okay and inflation is percolating back up. And so there's an argument that they can't cut rates, or they're going to have to increase rates. So they're really stuck between a rock and a hard place is the best way to look at it.
But do you agree with the market expectation, at least, that inflation will remain sticky going into 2025?
I do. I think I do. I mean, you see the inflation swaps are starting to show that. You also see the CME FedWatch site is showing that there's a 90% chance they are not going to cut rates at the next meeting. So yes, I mean, it appears to me that at a minimum they're going to stay flat. I don't know if they're going to raise rates. I also thought, when you bring up Bowman, I also thought it was interesting that yesterday President Trump said interest rates are way too high and we need to get them lower. So I sense that there's a colossal clash sitting up here between the Fed and Trump. And although Trump can't fire Powell, he can certainly make his life miserable by making a lot of noise about interest rates, and I'm guessing he probably will.
Now, let's talk about this broken system that you referenced earlier.
Sure.
What exactly is broken? How is it broken? And then we can talk about what to do about it.
Yeah, sure. Just at a big picture level, the notion that you have a Federal Reserve Board of 12 people setting the most important price in the world, which is the price of money, the interest rate. Nobody could do it, even if they were godlike in terms of their intelligence, and they're not. They couldn't do it. The interest rate should be set by supply and demand, the supply of capital savings as against the demand for investment savings. That's a market-based economy. I mean, what we've got is like a command and control communism-based economy. It's like the Russians setting the price of grain. And this is why the economy has swung back and forth between booms and busts and bubbles and crashes. The Fed, and when it's really tight, like under Volcker, it went as high as 20%. And then when it's really loose, like when the dot-com bubble burst or when the housing bubble burst, in particular, they took it down to 0%. So these interest rates are all over the map, and nobody can make intelligent long-term plans as a result of these mandarins that run the Fed setting the rates. I mean, they shouldn't be doing it. That's wrong. And and the outcomes that we were getting as a result of it are causing a lot of pain for a lot of people, throughout the world, really. And so, so we've got to return to a system based on sound money where interest rates get set at the price at which savings and investment, match one another. That's the fundamental thesis of the book. But there's a lot more to it than that, but I'm trying to boil it down to a couple of sentences.
Before we continue the video, let me tell you about how important it is to protect your personal data. A massive data breach recently exposed nearly 3 billion personal records, once again highlighting the growing risks of having your private information online. It's a reminder of why protecting your data is so important. That's why I use today's sponsor, Delete Me. They help remove your personal details like your address, phone number, and more from hundreds of data broker sites. It's simple, effective, and something I trust to keep my information safe. Getting started is quick. Submit your details, and within a week, you'll get a privacy report showing exactly where your data was found and removed. Delete Me keeps working all year round to monitor and remove your data so you don't have to worry. Go to joindeleteme.com/DavidLin, link down below, or scan the QR code here and use the promo code DavidLin at checkout to get 20% off of all US plans. Start taking control of your privacy today. I mean, the Federal Reserve is a relatively recent phenomenon. It was founded at the turn of the century, last century, of course. And, before then we had free banking. But tell us how interest rates were set before a centralized authority.
Well, they were set in the marketplace, and we did have free banking, and even before the Fed, I mean, they were set as the cost of capital, and capital at the time, true money, was gold or silver, underlying it all. Although there were exceptions to that, Lincoln printed greenbacks and so forth. But yeah, in the past they were set in the marketplace, but it's a little more complicated and tricky than that, because the banks had, the ability to do fractional reserve lending and lend out money that they didn't really have. And so that whole system in and of itself, led to a series of booms and busts, which was then actually used by the bankers to create the Fed. They claimed the Fed would dampen out these swings and provide a necessary backstop, and wouldn't overstep its boundaries. And then, in fact, they did create the Fed in 1913. It immediately overstepped its boundaries and broke the rules in order to finance World War I. So, this is a problem that's been going on for some time. And it's there've been steps along the way that have accelerated it. Roosevelt accelerated it when he confiscated gold. Nixon accelerated it in 71 when he went off the gold standard. Bernanke accelerated it massively in 08 when he introduced ZIRP and QE, quantitative easing. And so, and with each step, it's gotten more and more unwieldy and more out of control. And the fundamental thesis of the book, the thesis of, my investments in general, is that they have to continue printing money or the system will collapse. And not only do they have to continue printing money, they have to continue printing money in ever increasing measure, which is why, the COVID response was bigger than the GFC response, and the GFC response was bigger, the one before that, and so on and so forth. So it's a system that's broken, David, and it's either going to get solved as a result of intelligent policy decisions, or it's going to eventually go over the cliff, and fiat's going to fail, which so many times in the past it has.
There's a few things that may point to the other side of the story, which maybe I can ask you to address,
Sure.
Lawrence. So first, if you take a look at, I was looking at this chart a while ago, a couple of weeks ago, and somebody pointed this out. The number of recessions over the last 150 years is the 1800s, and the duration of each recession, they have both decreased in both frequency and duration. Meaning before there were more recessions, they lasted longer. Now it seems that the only way we're going to get a massive slowdown is some sort of systemic shock, whereas before it was part of the normal business cycle. Clearly something is working. I'll just let you address that.
It's working if you measure it in terms of recessions. And the
Sure.
reason you're not getting as many recessions is that they're just printing their way out of every downturn.
Mm-hmm.
It's not working if you measure it in terms of inflation. The level of inflation that we've experienced since 1971 is just large and unprecedented, and it's caused enormous pain for people all over the world. And
Sure.
so, it depends on what you want to measure, right? I mean, if you want to measure recessions, sure, there've been fewer, and we had normal cleansing cycles in the past that led to recessionary times, although some of them were pretty quick. I mean, the downturn of 1920, was a year and a half. So, but yeah, your point is correct. But my point is that inflation is really the thing that's causing damage to everybody. I mean, if you look at the average working person throughout the world, they've just seen the cost of most things they buy, go up 40% because the money supply grew by 40% with the COVID response. And their wages haven't kept pace. And so this is what leads to the wealth inequality. I mean, as you and I both know, there are a group of people who actually have figured out how to game the system and benefit from inflation. I mean, the wage earner does not know how to game the system. They can't borrow at 0%. They pay credit card companies 25% to borrow money.
Yeah.
And so they're at a very severe disadvantage to those people who are on the inside who know how to game inflation, actually make inflation make them wealthier.
The
So,
rate of inflation right now is below 3%, though, Lawrence. One could argue it's not that much of an issue anymore. How would you respond to that?
well, two things. One, it's yes, after it just went up 9%, a year and a half ago.
Yes.
And the overall, it's still running. And two, I would also say that, as shadow government statistics has said and shown, and it's demonstrated in my book, the government inflation statistics are not accurate. I mean, I don't think there's anybody who really believes 3% is the actual rate of inflation. If that's the case, then why did my homeowner's insurance go up 100% last year? And why did my auto insurance go up 30% last year? And why are food prices going up at greater than 3%? I mean, there are a lot of things in these numbers. The politicians have figured out very effectively how to game the numbers, but I will give you your due. I mean, inflation is not running as hot right now as it was at the peak in COVID, and that's because they raised rates and slowed down the growth of the money supply. So, it does wax and wane, but I think the important thing for people to understand is that the long-term trend is solidly up.
Right.
And so, maybe it's 3 now, but it could be higher, not too far from now.
Why is the long-term trend solidly up, though? What would because
Well,
there's
it's
more
because
money printing?
yeah, it's because, well, it's not only that, it's because of the compounding of the debt and the debt doom loop. I mean, mathematically, they have to continue to print money to service the debt that's out there. And let me just give you a good example of it. Let me describe the debt doom loop. I know you know what that means, but some of the listeners might not. The U.S. government pays interest on its $36 trillion worth of debt, and that interest expense is now running around 1.2 or 1.3 trillion a year. 5 years ago, that was 300 or 400 billion. So that's gone up very sharply with this increase in rates that they put in place to try and tame the COVID inflation. Well, that caused the deficit to get larger, and the deficit getting larger meant the government had, how does the government pay for a larger deficit? They sell bonds to raise the capital to cover the deficit. Well, the bonds go out there into the marketplace, and more supply of bonds, the same number of buyers, interest rates are going to go up. Well, if interest rates continue to go up, then guess what? That interest expense goes up because we're the biggest debtor in the world with 36 trillion, and the deficit gets bigger, and that means you have to sell even more bonds. And you can see where I'm going with this. It's a vicious circle in a negative feedback loop, where ultimately, the Fed is in the entire bond market, and interest rates are skyrocketing. And what that then leads to, what that will shove them into, and they haven't done this for a while because they're actually reducing their balance sheet right now. What that then will lead to is they will have to institute yield curve control, which is effectively QE, where they say, okay, we cannot tolerate these high interest rates. We are going to buy the bonds. We're going to issue the bonds, and we're going to buy them ourselves. And what that really is that's just, we're going to print the money to pay the cost of interest. And so a comparable to this would be, this is like this is like the family that has a lot of credit cards, and they're making the minimum payments, and they're unable to make the minimum payment, so they go get another credit card with a bigger credit limit, and they borrow against that to make the minimum payments on the prior ones. So it's a vicious circle, David. That's the problem.
I have to, speaking of the money supply, let's take a look at the M2 money supply. This is a story that may or may not be flying under the radar on the media here, but this is the M2 money supply. And we are once again nearing the peak of the Fed's balance
Right,
sheet, or not balance sheet, but the money supply in the financial system. This is M2. There's various measures of money,
right.
but we're nearing the peak of 2022, Lawrence. And if you just take a look at it from a annual percent change basis, percent change from a year ago, you can see that it is growing at 2.6% per annum. And I wonder why
Right.
that is, and whether or not this is a precursor for more inflation.
I think it is. I mean, and you can see, obviously, you can see the enormous, look at how big that spike is with the COVID event. I mean, it's really, that's I mean, they grew the money supply 25%. That's just huge. And so we're still suffering from that. I mean, people say, why do we still have inflation if the money supply is now only growing at 2 or 3%? Part of it is inflation is also a psychological event. And everybody who saw their wages, decrease saw their purchasing power, get decreased because their wages didn't go up. They're still asking for higher wages. And, frankly, I mean, there haven't been anything in the papers recently, but, we saw the dock workers, we saw airline pilots, we saw a lot of people, striking and getting 10, 15, 20% wage bumps, which they needed to keep pace with the higher level of inflation. So yes, I mean, this
The,
goes back to my point that they have to inflate it with debt growing the way it's growing. They have to inflate the money supply to service the debt, or else, not enough money to pay the debt.
here's my pushback here. This look
Sure.
the rate, the natural rate of growth for the money supply has been hovering around 5 to 6%, 7%, 8% in all throughout the 90s and 2000s. There was a massive inflation. Then it's only when it goes to double digits above 20% in 2021 that we had the 9% inflation rate that we saw. So this is just normalization, right, from the base
Fair enough.
effect.
Fair enough. And that's I think what the market thinks, that we're now living in an inflation or a deflationary world, and we'll
Hmm.
go back to where we used to be.
Yeah.
And I would say that would have been a possibility if we weren't in such a deep debt hole. And the fact that, we wasted $8 trillion in the Middle East, and we've run up a $36 trillion debt, and we've got this enormous interest expense. I mean, that to me is the piece that's different. I mean, if you go back to 2000, or you certainly go back to the early 80s,
Sure.
debt to GDP was 30%. And so you didn't have this underlying burden. The problem with debt is it's cumulative. And, it's not as though we're paying it down, it's getting bigger. And so that's why I think that, this 40-year trend of deflation that we've had, that was brought on by, cheap goods out of China, and, fracking oil and a lot of other benefits that we had. I think that trend has shifted. And we are now, psychologically, workers want more money because they know there's inflation. And
Yeah.
even though the money supply is under control, I think we are in an inflationary world. And again, it goes to the debt issue, and the fact that the government has to keep the system going. I mean, if there's a way that it would not be inflationary, and that is they would, balance the budget. If they were to cut defense, and they were to cut, the entitlements by 30 or 40%,
Hmm.
and move towards a balanced budget, and actually look at, maybe paying the debt off, or at least not growing the debt,
Mm.
well, then the problem would not go worse, and I would be willing to accept the possibility that inflation won't return. But I think, what I see out of Washington, D.C., I don't see much, evidence that they're going to go in that direction. I mean, they're talking about it in this Doge program that Elon and Vivek are talking about and trying to convince Trump on. I mean, that's the right kind of talk, but the math is just very much against them. I mean, if you look at the U.S. federal government, it spent $6.75 trillion in September fiscal year last year. 80% of that is pretty much untouchable. I mean, if you assume that Social Security, Medicare, interest, which we got to pay, and then defense, which, we could maybe touch that, but those four items are 80% of the budget. So, the balance is like $1.3 trillion.
So we've talked about how inflation is a problem still for people. Well, let's talk about what to do about it. I know you're invested in both gold resources and Bitcoin. Take a look at what Mark Cuban said this week. He's been making rounds in the media. Mark Cuban, I'd rather own Bitcoin than gold. If something bad happens to the economy, I think it has more value. People see it as an option in the event of the economy going down or something bad happening. Gold isn't based off the supply and demand of jewelry. And then he said, people who hold Bitcoin see it as great store of value. Do you agree? In
Yeah, it's, this, I mean, I don't know how much you followed Cuban's thought patterns on this, but if we watched him historically, he was skeptical, and he's really kind of come around here. And so, yes, I agree. I mean, as you know, and your listeners, I'm sure know too, that I've been a sound money advocate for a long time before Bitcoin existed. And so that had me in the gold business, or gold stocks and silver stocks and so forth. And until Bitcoin was invented, that was the soundest form of money around. Then Bitcoin came around, and, very volatile, but in my opinion now it's as good or better than gold. And certainly in terms of upside appreciation potential, it's more volatile still, but that's just because it's being adopted. And I really kind of view it as digital gold. And the macro point that I would make that, I think most people who listen to me know, and is that, the government is in a position, as we discussed, where they just have to keep printing money and diluting the value of the currencies compared to things, goods and services and assets. And the beautiful thing about gold, the beautiful thing about silver, the beautiful thing about Bitcoin is the government can't print them. They're outside of government control. And I think that's, it's important. I think it's going to become more important, as in this next 5 or 10 year time frame.
Yeah, I don't think Cuban has ever liked gold. He called it a pet rock at one point. I don't know if Joe
Yeah.
has that point of view. But yeah, why invest in a rock? I mean, what's the upside here? I mean, yeah.
Well, I mean, look, before Bitcoin came along, it was the soundest form of money around, and it's got, 5,000 years of Lindy effect, and 8 billion people know that gold is money. And so it's not going to just disappear. I mean, people say, well, Bitcoin's going to replace gold. And to some extent, that's true. And Bitcoin's price performance will outperform gold. And that's because it's, they both will go up as the, money is diluted. I mean, that's a fact. But Bitcoin will, in my opinion, go much, much faster because it's also enjoying an adoption curve. I mean, gold is not some new thing. I mean, it's been around for millennia. And so anyone who wants to own gold knows what it is and they've already bought it. And whereas Bitcoin, 15 years ago didn't exist, and 10 years ago almost nobody knew about it, and now more people know about it. And so that adoption curve is what's making Bitcoin outperform gold. But they both will go up if fiat currencies fail, and I think there's some chance of that. They will both go up in fiat terms. Now, the problem there is, I mean, we could have $10,000 gold, we could have $1 million Bitcoin, we could also have, $30 gasoline. So, because fiat, is just programmed to debase.
So the when you say fail, it just means purchasing power of fiat is going down. That's what you
It's
mean,
just
right?
going down, and at varying rates, though, as you and I discussed earlier in this call,
Yeah.
or in this conversation. I mean, some years it goes down 9%, some years it goes down less, but there aren't many. I mean, there aren't years when fiat goes up very often in terms of assets, gold and silver and Bitcoin and real estate and so forth. So, and that's just the way the system's constructed.
You made a call on my show a couple months ago that Bitcoin is heading to $200,000, I think, by the end of the year. I think you said. Are you still stick to that timeline? Bitcoin's down to
I do.
92,000 now.
By the end of 2025. I mean, I also made calls that Bitcoin would hit 100 by the end of 2024. Unfortunately, I was right about that, although it's bounced around that level. But yeah, I do kind of think we'll see 200 on this particular cycle. And by the way, once we get there, we might correct back down to 130 or something. But we are in a bull market cycle for Bitcoin based on, the past cycles. They tend to go 5x off the base, and the base was called the base. Depends on what you want to look at, but say it's 40,000. 5x is 200. So yes, I think this cycle will take us to 200, but that's just a guess. I don't know for sure.
Right, but Lawrence, the major impetus or catalyst for a higher Bitcoin price, one could argue, already happened. We had the Bitcoin ETF, the most successful
Yep.
ETF launch of all time. Trump has been supportive of Bitcoin, pro-Bitcoin people in government. All happened already. What's the next catalyst then?
Yeah, it could all be in the price. Well, certainly one that we're all watching, and we think that it's going to happen is if the United States decides to unilaterally, create a strategic Bitcoin reserve, that could have an impact on the price. I think that, there's evidence that other countries are accumulating Bitcoin. And so there's further evidence that, in my mind, that this is starting, so this used to be a very individualized investment, just crazy Bitcoiners were buying it. Then it became a broader investment when the ETFs got approved and people like BlackRock, the largest fund manager in the United States, started buying it and approving of it.
Yes.
And now we're kind of moving into a situation where countries are buying it. I mean, El Salvador has been buying it, but they're kind of small and they were the first mover. I was at this Bitcoin conference in the Middle East at Abu Dhabi in December, early December, and Trump's son was there, and so was Paul Manafort, who's a Trump guy, who did part of the transition team, and it's pretty clear to me that they think that they're going to do a strategic reserve. And the other rumblings behind the scenes were that Abu Dhabi, Oman, or Abu Dhabi being UAE, Oman, and the Saudis are all accumulating Bitcoin. And in fact, I was told that they want to announce it, but the Trump administration said, can you wait until after we've announced ours? So, if you get to the point where nation states start to realize that this is important, I mean, look, nation states realize gold is important. That's why they hold gold on their balance sheet. That's why central banks have been net buyers of gold for the last 5 years.
But do you
But
agree with Cuban with the notion that Bitcoin is a better safe haven asset in hard times?
well, yes. I mean, so let's get our terms right. Let's define safe haven. I mean, there is no doubt that Bitcoin is more volatile than gold. I mean, that's just a statistical fact.
Yeah.
So, if you want to define safe haven as low volatility, then no, gold is a better asset than Bitcoin. If your only measure is volatility, I mean, if your measure is alpha and potential upside, Bitcoin crushes gold. So, it kind of depends on what you're looking at it for. I mean, one criticism a lot of people have leveled at Bitcoin is they've said, well, it's really just a liquidity widget and it trades like the Nasdaq. When the Nasdaq goes down, Bitcoin goes down, and it's not a it's there isn't a safe haven bid for Bitcoin, and that's a fair criticism because there has been a pretty tight correlation. But I think that that will change over time. I think that we're heading into a period where it's going to be seen as a safer haven, and I'll tell you why I say that, David. There's a really interesting chart. I don't have it in front of me right now, but if you run a chart of Bitcoin compared to the long bond, what used to be the safest haven financial asset, the long bond, the 10-year bond, the 30-year bond, right? I mean, as a U.S. Treasury, couldn't default, it was good as gold, so to speak. Well, if you look at Bitcoin and gold and compare to that, they are just absolutely crushing it in the last 3, 4 years. And so the bonds are disappearing as a safe haven asset, in my opinion. And Bitcoin, gold has always been a safe haven asset. I think will continue to be one, but Bitcoin, I think it's going in that direction. But just as with anything else, when you're in the early adoption stage of something, it's going to have a lot of volatility. A perfect example of this, Amazon. I mean, Bill Miller made a fortune by believing in Amazon early, betting big on it. And this is actually in the book I wrote, Amazon had multiple huge drawdowns, in the early years before it really got fully established. And that's very comparable to what Bitcoin is seeing. I mean, let's not forget that Bitcoin has had corrections of 70 or 80%. And I don't think the next correction will be that large because I think there's more universal demand. But I don't think we're suddenly in a world where there won't be corrections in Bitcoin. I mean, I fully expect that we'll get a real big ramp on this cycle because that's how it tends to happen. And that at that point in time, everyone will be a little too ahead of themselves and we'll get a correction. And, so we go to 200, we come back to 120, something like that. I'm just making those numbers up, but it's kind of my guess.
Not everybody in the crypto space is bullish short term to medium term on Bitcoin. Take a look at what Arthur Hayes of BitMEX had to say. Time to sell. He said
Yeah,
that,
there,
yeah, right
yeah,
on
there are a lot
schedule,
of,
just like every other year. It will be time to sell in the last stages of the first quarter and wait for positive fiat liquidity conditions to reemerge in the third quarter.
boy, he could be right, he could be wrong. None of us really know. I mean, this
Mhm.
asset trades like a wild animal.
Yeah.
But I would be more worried about missing, the upside than about any potential downside from here. I mean, the model that I use that I think is a pretty decent model is the power law model developed by Fred Krueger and a few other guys. And it says right now fair value is kind of right around 80 or 90. And sometimes this thing gets to two standard deviations above fair value, which would take you up to 200. And sometimes it trades at half a standard deviation below fair value, which would take you back down to 60. So, my view is, I mean, I don't look at it as something I trade. Okay. I hold it for a very long-term time frame because I think it's going to continue to compound at a rate that's higher than almost anything else out there. I mean, maybe if you can pick a really good company that turns into an NVIDIA, you can beat it. But, for those of us who can't do that and just want a safe, place to put your money, or, in a 5-year time window, I am highly confident that the performance of Bitcoin is going to be really good.
What does the
Now,
ordinary, sorry, go ahead.
yeah, no, I just but between here and there, David,
Yeah.
it's going to go up and down a lot, right?
What does the average person do then about the deterioration and ultimate destruction of fiat currencies? We need a medium of exchange for our daily lives. Bitcoin, gold, safe. Their investments, their stores of value, but we need something to transact with on a daily basis
Well,
that doesn't
yeah.
depreciate. Right? What do we do about that?
Well, so I think the way a lot of Bitcoiners and gold people handle it is, I mean, you've really so money really serves two functions, right? You've got your money that you're saving, and then you've got your money that you use to pay your bills. And I know a lot of people who all their savings money is in either gold or Bitcoin or some combination of those two. And then as they need money to pay bills, they may sell a little bit and pay the bills, but they don't leave money sitting in dollars just, unprotected, getting 4% on treasury bills or something. It's not enough return. And so you kind of divide your money into two buckets, your savings bucket and your spending bucket. And the dollar is obviously the reserve currency of the world. It's the easiest thing to transact in. I will say this, I mean, the Lightning Network is getting better and better, and there will be ways to transact with Bitcoin more easily in the future, but it's still early days. And so, to me, it's a straightforward thing that it's what I'm talking about are savings and investment,
Hmm.
not dollars that you're going to spend. If you need the money tomorrow, I mean, for people who are all in on Bitcoin and have to sell Bitcoin, fine. If you want to do it that way, great. But I always keep a small balance of fiat to pay bills with. So,
And this comes to the point of why Bitcoin is not used universally as a medium. I say universally as a medium of exchange right now. Obviously, you can use
yeah,
Bitcoin for many things. Gresham's law. You're familiar with the concept of Gresham's law.
absolutely.
Bad
Yeah,
money drives out the good. Let me just give a 30-second synopsis for the audience. So when you have a currency that is going to be debased, in theory, you would want to spend that currency that you think is going to get debased and then save the good money for a store of value. Ironically,
right.
what that means is it drives out the use of such good money in circulation because no one's going to use it. Everybody in the Bitcoin space is saying, well, if it goes up, it's going to, increase your wealth. It's going to store your value. Why would I spend it? Ironically, that means no
Exactly.
one's going to use it.
Yeah, that's exactly right. It is somewhat ironic, but what'll happen over time is there'll be more and more ways to very easily convert it and convert back and forth.
Yeah.
And so that's that just is what it is. And we were still in very early days. I mean, and one thing I'd like to point out, David, I think your listeners might enjoy it, is just the notion that I mean, a lot of people I know think they're too late. They look at Bitcoin at 100,000, they know people who bought it cheaper. They think, how can I pay that? It's way too much. It's too high.
Hmm.
And what they don't really understand is that it's going to continue going up for a very long time as it kind of slowly but surely replaces the dollar standard. And there are $900 trillion of global financial assets out there. If you look at everything, if you include real estate, stocks, bonds, cash, etc., the Bitcoin market cap today is 2 trillion. So it's 0.2% of all of the assets out there. So, that's a very small percentage, a very small weighting. I mean, we're still very early days. And I mean, Bitcoin could go up in value 10x, which would take it from today's value of 100,000 up to $1 million a coin. And if it were to do so, it'd still only be 2% of total assets out there, and so it's got quite some way to run. And I think that's one of the things a lot of people have a hard time getting their head around. I mean,
Mm.
I know when I was buying it, I mean, Max Kaiser bought it at $2 and I was buying it at 400. So, everybody feels like they're too late. But if we're correct that, the fiat is slowly but surely getting debased and that this is a potential new monetary system, which I think it is, and my book talks about that, then you're really not too late. You just buy it and forget about it, hold on to it, and I think you'll wake up in 3 to 5 years. I mean, in let's say in 5 years it's $1 million a coin, which is kind of what I expect. 5 years.
Sure.
Well, anybody coming along looking at it then is going to say, "Oh my God, you bought it at 100,000? Gee whiz, I wish I'd done that." Right? And so, and then of course the person who buys it at 1 million, that 10 years later it'll be at 10 million a coin, and somebody will have the same conversation. So it's the thing, and the reason I say all this, and the thing that I also think is important to point out with respect to it is we've never seen anything like this, David. This is a commodity
Hmm.
that has an inelastic supply we can't make any more of it. So the 21 million, we're growing towards that. We're at 19 and change. So there's a little bit more being made, but I mean, basically, we're very close to the supply limit, and as a result of that, doesn't matter what the price is. The schedule of supply isn't going to change. If price of gold goes to 10,000, which I fully expect in this cycle, by the way, we're going to mine more gold. I mean, they're going to dig more holes and produce more gold because it'll be profitable to do so. The issuance schedule of Bitcoin doesn't change. And that's why it's very hard for traditional financial people to get their head around the fact that this thing's going to go up a whole lot. It's a very asymmetric bet. And I've been saying that. The book says it. This is the most asymmetric thing I've seen in my 40 some odd years of making investments. And so
Do you feel the
um,
same way about any other digital asset, Lawrence?
I really don't. I don't. I mean, I don't, and I'm not. And some maxis. I'm a Bitcoin maxi, which means I believe in Bitcoin above most other digital assets. I don't go so far as to call them all shit coins because, as some people do, I think there is a lot of fraud and malfeasance in some of these coins, and I think I look at like Doge at $50 billion of value, and I'm just like, well, I don't get it. Or Fart Coin recently went to a billion,
Yeah.
billion five. There's a lot of nutty stuff. Having said all that, the layer two. So we've established, in my opinion, we've clearly established that Bitcoin is the superior store of value digital currency. It's digital gold. The medium of exchange currency for online is still, I think, a little bit of a jump ball. I mean, hardcore Bitcoiners think that the Lightning Network will provide that. But there are people and intelligent people who have alternative views that another currency will emerge that will be a much better and more efficient and widely used way to exchange money in cryptocurrencies, whether it be a stable coin or a Solana or XRP. I mean, there are a lot of different things competing for that, but there's no guarantee that Lightning is going to be the solution. So I think we just have to wait and see. But the thing about the thing about this medium of exchange coin is
Yeah.
by definition, it's not going to be a sound of money. I mean, a lot
This
of
is
them they're built on Ethereum, and Ethereum's had seven monetary policies, right?
and
Which is
that's
a
a good,
problem.
yeah, that's a good point because here's my issue with Bitcoiners and crypto enthusiasts talking about an alternative currency for a medium of exchange. If you actually look at B2B transactions on platforms like coin payments, for example, they used to transact primarily in Bitcoin many years ago. Now it's primarily stablecoins. Stablecoin is just a digital fiat. People are still using
Exactly.
fiat in blockchain form. Um, so
Well,
there's
yeah, that's right. That's exactly right. And the other thing that's really true is that we've got pretty good payment mechanisms. I mean, you got PayPal, you got Venmo, you got
yeah.
credit cards, you got I mean, it's not like medium of exchange and the dollar works. So a medium of exchange is pretty well covered. Now, if you're in
Mhm.
the third world, maybe it's not. If you live in, there's actually have a good example in my book about how Nairobi has become a very heavy user of Bitcoin because they got a shitty currency that
Mhm.
depreciates constantly. And so there are a lot of people there who use Bitcoin and Lightning to transact. But yes, the medium of exchange question is still a very undetermined and unanswered question in my mind. But that's a different issue than the issue of investing in a currency or an asset that will protect you from inflation, which, in my opinion, there's just nothing that even compares to Bitcoin, on that for that problem, right?
So tell us about a few interesting facts or pieces of information that you found through the research of your book. Yeah, we're writing of your
That's
book
a
rather.
that's a great question. Well, so first of all, I went back and I did a deep dive on monetary history and particularly with respect to the United States, and it's really kind of amazing how many times they've done inflationary things. I mean, the story of the War of 1812, the story of the Civil War and Lincoln issuing greenbacks, the story of World War II, where they printed a ton of money and the price level doubled in 6 years.
Yes.
So there was a lot of, it's not just inflation is not something that's just new. It didn't just pop out of the ground. I mean, there are people like Daniel Webster who said, inflation is the way that rich men, they fertilize their soil with the sweat off of the poor man's brow through inflation. So, and this was in the middle 1800s. So it's not like this problem is new. So there's a lot of fun stuff I found there. I also found a lot of corruption and told a little bit about some of that corruption and kind of pointed out. I mean, again, the book is trying to energize people to understand why the system is broken. And then given that the system is broken, what they need to do to, advocate to one, protect themselves, but also, to think about this politically. I mean, I think hopefully in the future there will be sound money political candidates that'll come along. In fact, up in Canada, I think, your potential next, prime minister, Pierre Poilievre, I think he really understands Bitcoin. He understands the importance of sound money. He is not a Keynesian. He is not a big spender, is my understanding. I mean, you probably know better than I do, but
Mhm.
but the point is that I think we're going to have more politicians that understand how important this issue is, and that's part of getting the whole issue solved. I mean, and we really need to solve this problem. A lot of people are hurting all over the world as a result of inflation, and we really need to solve it. I mean, I worry about my kids and their kids and yet unborn, but and I look around the country and yeah, I mean, look, I mean, we're fortunate enough to have roofs over our head and three meals a day, and you and I are doing fine. A lot of people who listen to us are probably doing fine, but there are a lot of people in this country who aren't doing fine. A lot of people in the world who aren't doing fine. This what they've done with this inflation thing has really hurt a lot of people very seriously. And so, we owe it to try and fix it. We owe it to those people to try and fix it.
Anything that private citizens can do to fix this problem. We can't control monetary policy, but I suppose we
No,
could.
we're not the Fed.
Yeah, I mean,
Well, yeah.
it just seems to be like a demand issue. It's like, well, inflation. This is a good counter argument to the monetary policy causing inflation thing. It's like, well, people buy things. The Fed doesn't buy things. The Fed can inject liquidity, but ultimately, once we have liquidity, people can choose to save it, but they don't. They just spend it, right? So,
Yeah.
you know, it's a
Yeah, but
cultural
that's
phenomenon, is what I've heard.
right. But that's yeah. But spending money is what human beings need to do to keep themselves alive. I mean, there's nothing wrong with spending money to feed yourself. I mean,
Sure.
and inflation is certainly not driven by spending money. It's the fact that there are more monetary units out there, so that what you're competing for has to go up in price. Just a supply and demand issue. But yeah, the point I guess that I would make is that inflation really is the core underlying problem. And when we solve it, things will get a lot better. And I guess one of the things I think a lot of younger people don't understand is that it is a solvable problem. I lived in a world pre-71 that was not inflationary.
Yes.
If you study the history of the United States, I mean, we had these inflations when, say, Civil War broke out or World War One broke out. But in general, there were very, very long periods of time in U.S. history when the price level was damn stable. I mean, it didn't change at all. Inflation was not an issue, and that's because we were on the gold standard and things were sound. So
Hmm.
there's nothing that says we can't go back to that. I mean, and that's a good piece of the book is actually kind of debunking the Keynesian propaganda that says we've got to have inflation or else the economy is going to die. We're going to go into a depression if we don't have inflation. I mean, that's how the Keynesians and the government people have spun this so that we all sit back and say, well, yeah, it sucks. This inflation sucks, but there's nothing we can do about it. We got to have it or the economy is going to die. And that's just not true. That's a lie. I mean, the economy did it, the United States built itself into the most, powerful and in many ways decent, country in the world from 1789 to 1946. And, we were on a gold standard, more or less. I mean, there were times we violated it, but my point is, it's not as if we didn't do reasonably well when the money was sound. And in 71, there was that big change. We broke the tide of gold, and that was the beginning of the problem. And it's sadly, we're now at the stage where the problem is pretty big. We've been kicking the can for a long time. The can's getting bigger, it's getting heavier, and we're not able to kick it as easily. And so something's going to have to give. And again, that's kind of what I try and lay out in the book, what I think it's going to be, and then how to protect yourself.
All right. Well, that sounds like a great conversation for another time. We'll delve deeper into MMT and Keynesian theories
Oh
versus
yeah.
yeah versus everything else. Yeah, we can talk about we haven't talked about deflation, the consequences of
Yeah,
deflation.
there's a whole chapter on the book on deflation, why it's good, why it's a positive thing, why it's something we should embrace.
Yeah, just give
And
us a teaser. Why is it good? I mean,
yeah,
deflation
sure.
implies negative economic growth, does it not? That's contraction.
Well, no, no,
You're
no,
losing your
no, no,
job.
no,
No?
no, not necessarily. It depends on how you measure.
Okay.
No, deflation implies that we are getting better at doing things, and therefore things get cheaper
Mm.
as a result of greater efficiencies. And so, deflation is what we've experienced in computers and TVs, right? In other words, electronics is a perfect example of a deflationary world, where every year, the chips get better and the technology gets better. And, what used to be a $10,000 flat screen TV is now a $400 flat screen TV. It's just as good, if not better. That's deflation. You get more for less price. And
Well, take a look at this, right? This is a chart that's been circulating a couple of
right.
years ago. So so
Yeah.
deflation of tech, right? Televisions, toys, that's
Yeah.
where you're software. This is where
Yep.
inefficiencies come in. But look at this, hospital services, things we actually need on a regular basis. College
Well, right.
tuition, college textbooks, Medicare, medical
Right.
expenses, childcare, housing gone up. So it's like our core necessities are just constantly inflating, and then things like technology, which arguably are disposable items, discretionary goods, deflating. Can you explain this?
Well, that's right. And that's because the microprocessor has more of an impact on the stuff at the bottom. But the point is the stuff at the top has been inflating because of the monetary system, not necessarily because of lack of innovation. I mean,
Yeah.
I mean, I suppose someday we'll have robotic nurses, and then maybe healthcare will be deflationary. But right now, it takes people to provide healthcare services, and you can't. It's hard to get more efficiency out of people past a certain point. The thing that's interesting to note here, and the book talks about this a lot, is I reiterate Jeff Booth's point from his book, The Price of Tomorrow, which says, we're trying to operate an inflationary monetary system on top of a deflationary world. And that represents a conflict. You're trying to continually increase the money supply to prevent the debt from going bad, when in reality, what you want to be doing is keeping the money supply flat or constant and letting things get naturally cheaper in the existing money supply. And that's what technology will allow to happen if we just let it happen. And so this conflict between these two systems is part of the problem that we're seeing today. And the book shows in a couple of instances how there were periods in the 1800s where there was a lot of deflation and living standards went up. I mean, there was actual real growth, real GDP growth in a deflationary environment. Prices were falling, and yet we were selling and making more stuff. So it's not the notion that Keynes said you have to have animal spirits to drive inflation, and that drives growth. And if we stop all that, we're going to have another Great Depression. I mean, the big thing, and there's a great quote in the book from Janet Yellen, who basically says, if we get close to deflation, it's all going to fall apart and we're going to have a depression. That's just not true.
Yeah.
I mean, the notion that Keynesians have is that okay, so if we think prices are going to fall, everyone will stop buying and therefore the economy will collapse. Well, hang on a second. I know, for example, that, and I use this in the book, that the TV I bought, for, $500 a couple of years ago, I know it would be cheaper in the future, but I wanted to watch TV 2 years ago, so I bought it. You know what I mean? Right. I'm not going to wait around for that TV to get cheaper. I mean, human beings have needs. And so the notion that, deflation is bad it's just wrong. And we've been brainwashed by the Fed to believe that.
Okay. Lawrence, excellent. When does your book come out?
So right now you can pre-order it on Amazon in the Kindle format. It's $9.99, so it's up there. And then it's also, right now it's written, the final manuscript is complete. It's in production, which really is layout, and that will probably take at the most a couple of weeks. I have a hard launch date of February 14th, but I actually expect to beat that. But I'm not going to guarantee it. It kind of depends upon how well this layout process goes. But I tend to think that within maybe 2 weeks from now,
yes,
it'll actually launch. And when it does, I'll make you aware. We can do another pod if you want to talk about it.
All right, we'll keep tabs on that. Thank you very much, Lawrence. We'll
Thank you.
Again soon.
Yeah, I always enjoy talking to you, David. I think you're doing a great job with the show, and I really appreciate it.
Well, I appreciate that, and thank you for being here. Thank you for watching. Don't forget to like and subscribe.